Welcome to Stealthy Finance Tips channel. Introduction. Rent control policies have long been a topic of debate, particularly among real estate investors. While intended to protect tenants from skyrocketing rents, these regulations can have significant implications for property owners and investors. In this video, we'll delve into the intricacies of rent control, explore its impact on real estate investments, and uncover the truths behind this often misunderstood topic. Understanding rent control. Rent control refers to government regulations that limit the amount by which landlords can increase rents on residential properties. These policies aim to provide affordable housing options and protect tenants from excessive rent hikes, especially in areas with high demand and limited rental supply. Types of rent control. Rent control policies can vary widely depending on the jurisdiction and local housing market conditions. Some common types of rent control include strict rent control. In areas with strict rent control measures, landlords are often subject to stringent limitations on rent increases, sometimes tied to the rate of inflation or other factors. This can result in below-market rents and reduced profitability for property owners. Vacancy control. Vacancy control, also known as rent stabilization, limits the ability of landlords to raise rents even when a tenant moves out. This prevents landlords from resetting rents to market rates between tenancies, further constraining potential rental income. Exemptions and exceptions. Some jurisdictions exempt certain types of properties or landlords from rent control regulations, such as new construction, single-family homes, or owner-occupied units. These exemptions can create impact on real estate investments. Rent control policies can have both positive and negative effects on real estate investments, depending on various factors such as market dynamics. Stability vs. profitability. Rent control can provide stability and predictability for tenants, fostering long-term occupancy. However, it may limit the potential for rent growth and lower overall returns for property owners, particularly in markets with strong demand and limited supply. Property values and appreciation. Strict rent control measures can dampen property values and hinder appreciation potential, as investors may perceive limited upside in markets with stringent rent regulations. This can deter investment activity and reduce liquidity in affected markets. Maintenance and upkeep. Rent control policies may incentivize landlords to defer maintenance and capital improvements to mitigate the impact of reduced rental income. Over time, this can lead to deteriorating property conditions and diminished asset value if not addressed proactively. Navigating rent control as an investor. Despite the challenges posed by rent control, savvy investors can still find opportunities to thrive in regulated markets. Here are some strategies for navigating rent control regulations. Research and due diligence. Conduct thorough research into local rent control laws and market conditions before investing in rental properties. Understand the specific regulations governing rent increases, eviction procedures, and exemptions that may apply to your investment. Diversification. Diversify your real estate portfolio across different markets and property types to mitigate risk and capitalize on opportunities outside of rent-controlled areas. Consider investing in emerging markets with less restrictive rental regulations or alternative asset classes such as commercial real estate or multifamily properties. Value-add opportunities. Look for value-add opportunities where you can improve property performance through renovations, upgrades, or repositioning strategies. Adding amenities, enhancing curb appeal, or optimizing unit layouts can justify higher rents and offset the impact of rent control measures. Long-term perspective. Take a long-term perspective when investing in rent-controlled markets, focusing on cash flow stability, appreciation potential, and property fundamentals rather than short-term fluctuations in rental income. Conclusion. Rent control remains a complex and contentious issue in the realm of real estate investing, with far-reaching implications for landlords, tenants, and policymakers alike. By understanding the nuances of rent control policies and their impact on investment strategies, investors can make informed decisions and navigate regulatory challenges to achieve long-term success in the dynamic real estate market.